Let's start this segment on the outside markets, if you don't mind. Let's take a look at what's going on with the Dow Jones Industrial Average. And over here on that big board, we have the prices on the December futures at 30,744, and that would be up 284 points. Now, it has eased back from its earlier high this morning by about 110 points or so. So a little bit of strength seen in the Dow. On the other hand, you look at the U.S. dollar index, and wow, we have December down 684 points right now. So that's at 112.195, getting in the neighborhood of about a 700-point drop here in the dollar. But on the crude oil trade, that one is fairly sharply higher again. November futures now at 87.54 per barrel. That would be up $1.99. Then we get to the grains, where we had the very strong export sales on the soybeans, and corn was okay. December corn right now is starting to firm up. Now 7.25 higher at 685.5. It was kind of a slow starter today, but it seems like it's gaining some momentum now. March is up 7.25 cents. On our quotes provided by Bar Chart, let's go to soybeans. They've been pretty strong all day. November up 18.75 at 13.91 and January up 17 cents right now at 13.99.5. Wow, just 2 ticks from $14. It can't seem to quite hang on to that. Now on the wheat in Chicago, you have December 5.75 higher. 8.47 is now our last trade after a high of 8.55 last night. Kansas City has December 3.5 higher. We're at 9.45 about a dime off of our overnight high there. Spring wheat in Minneapolis has December 6.25 higher at 9.59 about 7 cents off of its overnight high. And in the cotton market, which has given back a lot of ground here recently, December now just 10 points higher at 78.39 per pound. I'm joined by Mr. Ted Seifried of Zaner Ag Hedge this morning. Always good to talk with you, Ted. And this one is a bit of a challenge, trying to figure out what's moving everything around. Have markets going all directions. Soybeans still hanging in there pretty strong. Other than that, I'm getting mixed signals today. How about you?
Yeah, you know what? Let's start with the dollar. You know, the dollar being sharply lower today is really kind of giving strength to commodities across the board. But as you said, you know, there's some kind of weird intricacies of today. In particular, you know, corn had been lagging really behind because wheat had been down on the day. But just about 15 minutes ago, corn decided to come and join the party with about a 5-cent rally in a very short order. A lot of what we're seeing here, Marlon, is technical in nature. You know, you look at soybeans yesterday testing very, very key trendline support. We were able to bounce off of it and finish better by the end of the day. Now we're following through to the upside. It's helped out by the export sales number that we had for soybeans, a really decent number. Finally, we're seeing some decent numbers in soybeans, and put on top of that some daily wire sales for soybeans again today. So there's a little bit more renewed optimism that our export sales will be there. I can't say the same thing for corn quite yet, and really not for wheat either, which is why I think we were lagging behind. But again, go back to that lower dollar. That lower dollar certainly helping commodities as a whole. And say crude oil's higher, so therefore you can talk about the energy complex, you can talk about ethanol, you can talk about corn, so that's helping out today. Stock market's doing a little bit better, continues to do better. So that's easing some of these recessionary fears that we've had for the last few weeks. So really, when you put everything together, it was sparked by technical, by the hold that we had of key support in really everywhere, corn and soybeans in particular yesterday. And now we're following through the upside, aided by that lower dollar and some pretty decent export sales for soybeans.
Real quickly, do you think the big fund money is coming back into the grain market yet or not?
I don't think so. It's weird, Marlon. One day, yes, one day, no. We're very, very flighty right now. Markets are very, very flighty. And if you take a big step back, you realize that we've been in this really choppy sideways pattern in a lot of different things for a while. And it's sort of risk on, risk off, inflation on, inflation off, recession on, recession off. And that'll continue to happen until we have a better direction of what the overall economy is going to do.
Okay, we'll return in just a moment. We'll talk more with Ted Seifried about our livestock trade right after these messages. Thanks again for joining us today on a Thursday. It's been extremely busy. We had the grain export sales numbers that came out very strong for soybeans, and then we also had numbers for beef and pork exports too. And you know what? They just weren't too shabby today when they came out. We had the beef number coming in at 19,000 and 400 tons this time around. If you combined 2022 and 2023, it's interesting because in that total, Japan, usually they'll book like 100 tons for the next year. They do it almost every week, 100 tons, 100 tons, 100 tons. This time they booked 2,800 tons of beef for next year. I thought that was really intriguing that they took that action. I wonder what their thinking process is there. Pork, 40,800 tons this time around. And the key buyer was actually Mexico at 14,800 tons. And you did have Japan buying 11,000 tons of U.S. pork. Australia, 3,500 tons. That was interesting. Canada, 3,100. And then you get to China. They bought 3,000 tons of pork last week. So all in all, a very active meat export sales week. Ted, that seemed like a minor victory there at least.
Yeah, I'd say so, Marlon. Yeah, a good meat export sales week. I like that. Yeah. Okay, you look at hogs, though, and you say, hey, 40,800, that's a really solid number. Why are we down on the day? Well, okay. Also keep in mind that we are bouncing that December hog contract all the way from 73 up to 88. And we've gotten really rather overbought. So just a little bit of a pullback here, kind of back and fill, sort of buy the rumor, sell the fact. Traders like cliches. Here, there's one for you. Yeah, so down just a little bit. I don't think that's a cause for concern in hogs. We've talked about earlier in the week that at some point we might have to see a pullback to around the 84 area before we can continue to go higher, if we continue to go higher, based on the idea that we have gotten overbought. Predictably, the feeder cattle are down on the day a little bit, with corn finding some strength here. But feeders have had a really good week so far. So again, maybe a little bit back and fill, cooling off of that market by just a little bit. And then you have the December live cattle, which really just holding on to a little bit of strength on the day, but really looking good. The last 3 days in cattle have looked really good. December live cattle getting back into the high end of the range that we were in just about a month and a half ago, certainly kind of approaching near those highs again.
Yeah.
That consumer confidence is coming back. We're thinking people are going to be spending money at the butcher's counter again. So we're feeling pretty good about our demand right now. And, exports weren't terrible, so that helps.
Well, December live cattle are down just a nickel. They're kind of holding their own at 151.30 right now. Let's check out our feeders as we get into the midday. November down $1 at 177.07 as the corn starts to firm up. And then you have lean hogs showing December 97 lower at 86.40. Thanks, Ted, for all the comments today. Good to visit with you. Ted Seifried of Zaner Ag Hedge. Janet, it's all yours.